All set.
All right, welcome to another episode of Real Estate Chat with Robert Eid and Jonder Perez. You get to guess who's who. And in this episode, we're going to be going through a couple of articles, a couple of economists that have shared some of their thoughts in this particular marketplace, stuff that we as realtors would love to hear, and I'm sure the general public would love to hear, which is this is the end, or at least the beginning of the end of tough times when it comes to the real estate market. But we're going to dissect, and we don't want to be pessimistic. We want to be realistic, and we want to base it on what's we're currently finding in the actual market and help you strategize your next steps leading into the winter months of this real estate market and ahead of the next year's spring market 2023. And so Robert and I will go through some of these articles, some of the findings of economists, and give you a strategy, a playbook of how you should navigate the next couple of months. So Robert shared with me, first of all, this article here from the Financial Post titled Posthaste, More Signs of the Beginning of the End of Canada's Housing Correction. And usually negative headlines, but this sounds negative, but isn't meant to be negative because it means beginning of the end of the correction. So they're trying to say that everything's going to be okay soon, or at least that's what they're sort of trying to allude to. Worst of falling sales and prices may be behind us, but before you get too excited, then they make you read their ad-filled article where you're scrolling down. And I want to jump to a quote from RBC Economists, and that's where we'll get Robert to step in, Robert Hogue. And this is the note titled the same thing, Beginning of the End for Canada's Housing Market. I guess we know where they got that headline from. Robert, what does Robert Hogue find is happening, and what is he anticipating with the housing market?
Well, he's looking at the Canadian Real Estate Association statistics that are national, that come out on the 15th of every month, for example, in November the 15th, about October. And so he's talking about what happened a month ago, essentially. And you can't put it together any faster than that. And in a normally stable or edging along market, that's perfectly good because things don't move in a big hurry. In this case, we're trying to go into the future. So everybody's saying, is this the bottom? Is this near the bottom? And we got to take into consideration that it's November. So November, December, January are always the lowest volume of sales, number of sales months, because nobody wants to do business in the middle of a snowstorm. And then since our market is also about moving to another property in 2 or 3 months, nobody in November wants to move in February. And so it's just a slow time. So these fellas who are not in the real estate business, but are given the job of watching the real estate stats on behalf of the bank or newspaper, whatever it is they work for, don't have the luxury of actually being in business, which I've said on other occasions. In this case, what they don't know is how the Toronto Real Estate Board, and I don't even know what's happening in Vancouver along the same line, is misrepresenting the number of new listings that are coming on the market. Now, we've touched on this a few times. Last week, Thursday, we had a meeting of the Toronto Real Estate Board, and I brought up the topic that they call relist comparison chart. They take and have calculated how many of the new listings are actually do-overs, repeats with the same listing broker, the same owner within a normal 60-day time period. So it's a do-over, it's a duplicate, it's too many. So they say that it's 29%. So even if we say it's 29%, that's a lot of overstating. If we overstated the sales by 29%, everyone would be outraged. If we overstated the sale price by 29%, everyone would be outraged. So why aren't people as excited as I am about the 29% over-reporting of the number of new listings, particularly when the number of new listings is then compared to the sales every month, and a ratio is discerned from that ratio of whether it's a buyer's market, a balanced market, or a seller's market. Now, in this case, if you use the bloated, inflated, including do-overs number that the Toronto Real Estate Board puts out, which is like almost half of the Canadian market in terms of number of units that are traded, it says that it's a buyer's market, meaning that there are lots for sale and the buyers have their pick. Buyers control the market. But if you take away the do-overs and you do the same ratio, you find out that it's nearly a seller's market. And we in the real estate business know that there's nothing for sale. And then we also hear anecdotes of, well, how come there's multiple offers on that one over there? And so that's where what I want to talk about this morning is, what is the composition of this 4,000 or 4,500 or 5,000 units that are being traded every month? Who are those buyers? It's not dead. It's half of what you normally see. So who are those people? I say the market is normally last-time sellers who are selling their house that they lived in for 50 years for the last time, first-time buyers, the other end of the spectrum, speculators who are buying something with 2 or 3 kitchens, or they think they can sell this condo again to somebody else after quickly renovating or something else, and then trade-up buyers who have got a townhouse and they want to buy a semi. They got a semi, they want to buy a detached, and whatever it is, they want to move from Brampton to Barrie. And that trade-up market is a vital part of it. And I believe that that market still exists and is a healthy component of the existing sales that we're having. So you're seeing, if you look at the reportings, the solds reporting, sold conditional on the sale of the purchaser's property is popping up, sold with an escape clause. What do you think that means? So that element is there, that very cautiously someone is saying, I'll buy yours if I can sell mine. Or they're selling theirs first and say, now I've realized $482 less, $1,000 less than I thought I had, but now I'm going to try and buy it off of somebody else who's just as serious about selling as I was. So I say that you've got some very cautious first-time buyers that are looking for the deal of the century, and trade-up buyers, and very little else. That's just why you've got half the strength of sales as you've had in a booming market. So who's buying now? Now, what are their prospects? Someone who doesn't care about interest rates? Is there anybody who doesn't care about interest rates? Some people who buy in cash, I guess they don't care about interest rates, but we have this inverse relationship we've talked about, where as rates go up, or what rates are perceived to go up. And this is one thing that Benjamin Tal in this very same meeting was talking about when he talked to the Toronto Real Estate Board last week about, what do people expect inflation to be? What do people expect interest rates to be? And then the Bank of Canada is trying to second guess what they think people are expecting inflation to be, expecting interest rates to be, and trying to not telegraph what they're going to do into the future, because they're going to raise interest rates up to 4 to 4.5. Maybe they're going to raise it to 5. If they have persistent indicators in their numbers, now their numbers are lagged, they're telling what happened in June, not in September. Anyway, they're going to do a little bit the wrong thing, because they're going to want to be cautious, because by not moving rates up soon enough to sort of cause this mess, they aren't responsible for COVID, which COVID threw everything off by wrecking the supply chain, and people weren't working. And now we're trying to get back to that. So that's the difference why we can't say it's not exactly the same as it was in 1990, when central banks were trying to whack inflation by raising interest rates, because the last time they did that, they hadn't had the experiences that we've had since then. We haven't had a great global financial crisis just a very few years ago, 10 years ago, in 1989, and they didn't have COVID, and the world is different. Like woke, would you've ever had anybody talking about any of the things that we throw into the category of woke back in 1990? No, you would not. The world is a different place. So what's the same and what's different? The real estate market is always the same, in that you've got someone that wants a better life and wants to live in a better neighborhood, more convenient in their I call it the principle of 5s. What do you do? 5 times a week, 5 times a month, 5 times a year. You're going to do the things that you do 5 times a week. That's going to be your greatest influence. So, you go to grandma's 5 times a year. That's not the big influence. You can drive a little bit further. What do you do 5 times a month? Maybe you go to a place of worship. What do you do 5 times a week? You go to school and you go to work. So that's what determines the location, and the attributes of the community. All these things are very much the same. So people always want to move, and they want to move when it's to their advantage. So the person that's going to see that it's to their advantage is someone who has money, can qualify, but they want to have a price advantage just in case prices lower next year. So they want to buy cheaper. So sort of a compendium of all the things I wanted to say all at once without answering one particular question. But
Well, now
no,
I'm caught up, but what's so you had also sent me projections for November. I know we're a bit past the midway point now for
yes,
November.
yep.
Needless to say, it's shaping up like a normal, well, seasonally speaking, sales dip, prices should dip in the months and weeks leading up to the winter market. But as we were chatting about earlier, Robert, before we turned this recording on, what's the worst case scenario here that could happen? Because the economists seem to think, hey, this may be the end of it. Things look like they're stabilizing. I mean, mind you, interest rates also haven't, like the most recent hike was not as aggressive. We're anticipating one next month. What's the worst that could happen leading into the winter real estate market? And what should somebody looking to make a move like is either on the sidelines now waiting for things to happen? Should they jump into the market? Should they sell? Should they buy? What should they do? Factoring in all of these things happening right now, the data that you and I see in almost real time, what's the strategy?
Interest rates are going to be higher in 2 months than they are now. Inflation is not going to be down, and prices are going to be down. So, what? That's not right. I don't want that to happen. Many people don't want that to happen. So you don't see that in the news because people don't want to hear what they don't want to hear. They'll switch the channel and they'll go somewhere else. I don't want to hear what he says. He says bad stuff. But if you're planning to sell something and you know that it's going to be worth less in the future, what do? You get rid of it now. Now, if you've got an estate sale that you're managing, you're the administrator from, it's going to be worth less than a while. You want to sell it right now. Quick, 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 quick. If you're going to buy another house and you're going to sell yours and you're moving up, maybe wait till the spring when all the tulips are up and everything's beautiful, and you're going to pay less for something that's better and you're going to get less for your house, and the difference will be to your advantage. So do what you like. If you're a first-time buyer, look around. There are many people who are absolutely serious about selling now that have not been able to sell. You see them going through again a rerun, change the price, low price hold offers. They're failing. It's really a mess because everybody is trying desperately to do something that's not happening. So just find somebody that's been for sale and is absolutely serious about selling and make them an offer. And if they won't take your offer, then ask them for something that you want. You want to have 1% less on the mortgage financing. You want them to pay your lender to buy it down. It's prepayment of interest. We were doing this a lot 30 years ago when interest rates seemed to be perpetually high. We've never had this participation by a third party in the mortgage process for a long time. So a lot of people scratch your head when you even say it. Prepayment of interest, buying down the interest rate. There's two lenders we saw. So the answer to the question is, be prepared for the worst because interest rates are going to be higher and prices are going to be lower. Do what that says to you to do.
And we're talking about even the spring prices higher year over year basis, because I mean we saw the spike this past spring, and of course that's what everybody's calling in perpetuity the peak of this market, and that's where everything's compared to. Robert, I would just want to throw something crazy out there. Aside from the actual property prices selling in the spring, pulling the average price. We're talking about obviously in the spring, higher priced condos, higher priced freeholds tend to sell, and that's what pulls the price up. Is there a possibility that the year over year spring prices will actually be equal to or higher than 2022 peak? In what world circumstance could that possibly happen, if it does?
Okay. In the peak, we had 1.3, and we built up from August, where we are now at 1.07. So it had a tremendous run up. Like the tremendous run up, you're not going to duplicate it. If you ask a very good question because they compare month to last month and this month to a year ago. And before we were building it up, and it's going to make a now transition where the year ago is higher than today. And so prices are now down 12% from a year ago. Oh, gee, it's not from the peak, it's from a year ago this month because February is soon upon us. So I don't know whether that's a different stat or it's the same thing I'm saying and just approaching it from a different angle. But find someone who is in the real estate business in 1990 and ask them. Ask them what it was like in 1990, 1, 2, 3, 4, and 5, until things turned around in 1996, 7, and then we've been on this 25-year upswing since then. It's a very complicated time to be in the Bank of Canada, because they have to, on top of dealing with everything, they have to put on a pretty face so you don't hate them. And they're worthy of being hated, but they have a job to do. Somebody's got to do it. And they're also following what the Federal Reserve in the United States says, who are also lying to the public because of elections and all these things, fighting politically.
So this will be very interesting leading up into the spring, because this will be before, I mean, not counting pandemic, when obviously the prices were thrown off course. This will be the first time you'll see prices less than their previous year counterpart in the spring, and obvious factors and less obvious factors affect that. I mean, interest rate, borrowing money costs more now than it did. Well, into 2023 spring, borrowing money costs more than 2022 peak, right? And so obviously prices, for it to be equal to or higher, there'd be other factors at play, but you're looking at only other supply and demand issues. But if you're looking at making a move in the next couple of months, you've got to factor these into your decision making in terms of what you want to do. And there are certain situations where you will come out ahead. If what you're buying is more expensive than what you're selling, you take a little bit of a loss on what you sell, but you save big on what you buy.
The trade up.
And if you're first time, exactly. And if you're first time buyer, it's just a matter of getting your finances and budgets in order. So we've got a lot more coming up to chat with Robert in our future episodes of Real Estate Chat. We're going to dissect a little bit more of that cancel-relists, because it seems like it's going to be a permanent report on the Toronto Regional Real Estate Board's part. I don't think they're going to fix it, because doing that would mean.
This is the best part. His answer, he gave me the same answer as was written in May, that this phenomenon is transitory. And that's exactly what he said, that it's going to go away. And so we're not going to kick up a stink about it, because it'll go away when people stop terminating listings and putting it through again as a new price instead of a rerun. So that's what they said about inflation. It's transitory. So I read him a note saying, it dawned on me that you told me it's transitory. Well, let's just see how long it is till you got egg on your face again.
Well, we'll see. And on that note, thank you everybody for joining this episode of Real Estate Chat. Please subscribe to this channel and comment. We love getting the comments, and Robert and I will be answering and interacting with you on the comments that you put on here. And if you have any questions for us, feel free to reach out. If you have any ideas for future things that you want us to chat about here on Real Estate Chat,
sure,
please let us know, and we'd love to hear from you. All right. Thanks, everybody. We'll see you in the next episode.